All right. Now, the first topic I'd like to discuss is last month's volatility in the stock market, because you stated that last month's volatility spike nearly crashed the system. Can you expand on that?
Well, sure. Our by system, I'm talking about our financial system and what it's become, and it's become this really bizarre market that I have to use quotes around, double quotes, to sort of indicate it's not the market that my dad would have understood or recognized, because it's all run by computers. There really aren't humans involved anymore, and it trades as a global entity. So, we see things like in August 2015, the yuan devalues by 3% and global markets went haywire, right? The Nikkei was crashing and the dollar spiked, all kinds of crazy stuff happened. So they're interlinked markets. And in fact, they're highly leveraged markets, meaning that there's trillions of dollars that are all linked to derivatives of derivatives. And so for those who know, a derivative is just something that's based on something else, right? So a gold future, the future itself is a derivative of the price of gold or real gold itself. But if you wanted to trade something that was going to trade off of the volatility around the gold futures, you would be trading a derivative of a derivative. And so a lot of people are trading second and third order derivatives, and that includes around volatility. And there's a lot of evidence to suggest that somebody is monkeying around with volatility and can use it to, in a tail wags the dog sort of a way, to drag up the cash market, which is the real market for equities in this case. But if you can make volatility go down, there's all these computers cross-linked with trillions of dollars under management at their disposal, lots of liquidity that would then use that signal of lower volatility to then go and bid up the futures for those same equities, which would then drag up the cash market because all these computers are doing this complex stuff. This began in 2008. It's only gotten more and more severe, and it's to the point now that it's just hysterical when mainstream media still wants to show markets on a down day. They still show pictures of guys and girls in red and blue and gold jackets, holding their heads. They don't exist anymore. There are no floor traders on the Chicago Mercantile Exchange. It's all just computers. So volatility spiked. It actually got really quite dangerous there for the markets, just because they're so stretched and so grotesquely overvalued and distorted and deformed by all the central bank interventions over the years, that it actually got very close to creating those circuit breaker moments where all the computers run away at lightning speed and are no longer participants. We saw the volume and liquidity in the S&P futures crushed to levels that were below what we saw in the flash crash of 2010. And that happened because all the computers that were busy running all their complex little algorithms went away. And that creates a very dangerous condition. When you have really low liquidity, anything can happen at that point. And that's when I'm convinced we saw officials step in and begin buying the market again.
Right. And can you explain a little bit more about how you were talking about officials stepping in and they really tried to suppress volatility? What is some of the evidence behind that?
Well, for instance, Jerome Powell, who's the new chairman of the Fed, in the 2012 meeting minutes of the Federal Open Market Committee, the FOMC, that were released a couple months back, in there he directly says, hey, we would have to unwind a very large short volatility position. So we don't know exactly what he meant by that, but it's a pretty direct statement of him saying, wow, the Fed has an active short volatility position. What does that mean? Well, you either have sold puts on something, maybe on bonds, or you've sold puts on equities, or maybe you're short volatility itself, meaning you've actually stepped into one of the volatility trades, which would be VIX futures or one of the levered ETFs or ETNs that are around that. So that's sort of evidence one. We have a Fed official, now chairman, saying, wow, we have a short volatility position. Evidence two is a little more indirect, but this is important. In the aftermath of Superstorm Sandy, the New York Federal Reserve, which is the largest component of the Federal Reserve System, it's an ecosystem of 12 regional banks, but New York is really, that's ground zero. That's the hot spot, always has been. They have a trading desk that is very actively out there doing things, what they're what they admit to doing is buying and selling treasuries and mortgage-backed securities, and that's it. They have a very large other category on their balance sheet, which is some other assets. It's huge, and we don't actually know what's in there, but we can guess because after Superstorm Sandy, the New York Federal Reserve said, I love this part, they said, well, we got nervous about continuity of trading and operations. We were a little worried if another superstorm came along, we would want our trading desk to be inland a little bit further. So where would we move that to? Well, they moved it to Chicago, actually to Aurora, Illinois, just outside of Chicago, which is right next door to where the Chicago Mercantile Exchange's trading servers are sitting. So the New York Fed moved all of its trading desk stuff to be co-located at the CME. Now, what's traded on the CME? Futures and options. On what? Well, all the commodities, plus all the bonds, plus all the equities for the U.S. shares, right? So these are the highly levered products we would be talking about, including things like VIX futures, other things like that, right? So we know they moved their operations closer to where the Chicago Mercantile Exchange is. And then finally, we know that if you go to the CME website, they still have it up. They talk about how they have a central bank incentive program. And they said because central banks are such high volume participants, they get the best pricing. Here's the pricing schedule. If you're a central bank of the world and you want to come and participate in this, here's how you do it. There's an application system. But that we know central banks are already really heavy users of those futures and options on the CME, but not one of them. Elijah, I've checked, every balance sheet I can find for all the central banks who might be participants in this, and I can't find one that admits to owning a single product from the CME on there, and certainly not the U.S. Federal Reserve. But they're there. So that's a little smoke, a little indirect, but to me it's good enough to say I would love to see who's buying what and when, because we already know that the Bank of Japan buys and has bought so much of the ETFs that they are now the majority holder of the Japanese ETF ecosystem. They are, in fact, in some cases, they are the market in these things, and that they preferentially buy on down days when the Japanese market needs a little pick-me-up, little boost. So these are the sorts of things we already know that central banks are doing. And here in the United States, we don't have the rules and regulations in place yet that would allow us, the citizens, to have insight into who's buying what and when, even though these are very large, non-economic, market-moving participants.
Now, you talked about how, this last month's volatility spike, which for our viewers, by the way, it was only 10%.
Right.
That the stock market, it was just a correction that happened. But if that nearly crashed the system, then if we look into the future and we see, the stock market's so overvalued and probably it seems like eventually it has to crash, will the Fed be able to step in or other officials step in and stop the volatility, stop the system from completely crashing?
Well, there's a couple of things that central banks can't do. They're very powerful, obviously. And, if you have the printing press and you can print up as much as you want, you can jerk prices around to wherever you need them to go. But the thing the Fed can't do is they can't print prosperity. They can't create actual wealth. They can redistribute wealth. And they've done a fantastic job. They've taken from the 99.9% and handed vast amounts of gains over to the 0.1%. And it's not just the U.S. Federal Reserve. These central banks have basically done this worldwide. They've concentrated wealth and income to extraordinary, if not historic, inequality levels. And the reason for that, Elijah, is very simple. They can't create prosperity. So in all of history, it's very simple. There has to be a balance between the claims on wealth and the real wealth itself. In this story, real wealth is not stocks, it's not bonds, it's not currency. Real wealth is real people producing real things out of real stuff that comes from the ground. It's really not hard. And so an economy can only produce so much of that real wealth, but the claims on it, well, those are infinite. All right, we just hit Control P on and print up some more, or its electronic equivalent, and that's the game that we're locked in right now. So somewhere in this story, you're asking the question, do the central banks lose control of this? Are markets larger than central banks? The answer is yes, eventually. The problem I see is that they've gone so far overboard this time. They are so over the top. They've created such a large gap between asset prices and what incomes can sustain that this next correction could actually be very, very disruptive.
Now, in what ways do you think it will be disruptive?
Well, kind of Venezuela style in the sense that you see banks closing, you see bank failures, you see institutional failures, things just don't work right. You might have massive currency movements that are themselves destructive. But when the dust settles, you find out that there was an extraordinary destruction of what people thought was wealth, and it corrects back down to what is actual wealth. We will see pensions ruined. We will see possibly decay and social unrest in places which no longer have the fabric of society left to support maintaining order and control and all of that. We're already seeing that erosion in major city centers where we noticed that policing is not as effective as it used to be, or like in Chicago where homicides are off the charts. These are just signs, Elijah, of the stress and the symptom, which is what happens when you have a central bank that sucks the economic oxygen away from one class of people and hands it to another class. It's trickle down economics by another name. Nobody voted on it, and nobody really had a decision in it, except the self-interested people who appointed themselves to be keepers of the system.
Now, you've also talked about how during this collapse, our democracy itself will be at stake.
Well, yes, of course. Let's look at what just happened recently in the elections in Italy, right? So the so-called centrists, the center left, the people who are sort of the keepers of the system, the people who are really the Euro-centric individuals lost big time. And we saw an ultra far right and then the party rise pretty strongly, which is centered around an idea of nationalism and anti-immigration. And we also saw Beppe Grillo's Five-Star Party, which now is nominal leaders, this 31-year-old who used to be a waiter, and I'm totally fine with that. But what we're seeing there is that when conditions get tight, when that economic oxygen goes away, people get restive, and what you're going to see next is populists get elected. Well, in the United States, we have a deep state running that very much doesn't like populists. It really likes things operating the way they've been operating, and we've seen them do extraordinarily anti-democratic things to maintain that control. I think that the democratic institutions require transparency, openness, free and fair elections that are easily audited and trackable. We're losing these things piece by piece. And here's the important point, Elijah. Things aren't even bad yet. When things get bad, that desire to cling on to power will only get stronger. And since we seem to lack accountability in the system at this stage, where we're not seeing people at the highest levels who are committing very clear crimes, they're not being charged, let alone indicted or prosecuted. When we saw that only one bank was really prosecuted in the aftermath of the 2008 crisis, and it was this very small bank run by some Chinese immigrants, the Sung family. There was a documentary that I think was up for an Oscar. I don't know if they got one or not, but great documentary. And it points out that not only did this family first detect one of their people inside their bank doing fraudulent trades, they fired him. They informed Fannie Mae. They informed the FBI. They hired an investigator to see if there was any more wrongdoing. And through all of that, the Justice Department and the district attorney's office out of New York decided that was the bank they're going to prosecute, right? That rule of law breakdown is a sure sign that you're in danger of losing your democracy. So my prediction is, with a big market correction, with that dashing of all those dreams that have to be dashed because we've just made promises that can't be kept, the very institutions of democracy themselves will come under further attack, because hard times make that easier, not harder.
Now, when it comes to electing populists, as we've talked about in Italy, it happened in the United States. It happened with Brexit. People voted for more like nationalist policies. They wanted to, in Britain, they wanted to leave the European Union. It seems like people are wanting to elect different people and people that can possibly, change the system. Is there any hope of that, of people actually changing the system?
Depends which country we're talking about. I think you can do that in a place like Italy, where you have more of a parliamentary system, where a fractional vote leads to fractional power. And then people have to negotiate. If somebody who's got 8% of the seats, well, you got to go talk to them. In the United States, it's different. We have an alleged two-party system. I gave up any hope of there actually being two parties in this country a long time ago. Very liberating. I'm not at all, don't spend any cycles hoping or wishing that one party will be better than the other. They're the same to me, absolutely identical in almost all key features when it comes to matters of holding financial criminals accountable, holding Wall Street accountable, conducting warfare programs, all of that stuff. There's literally no difference between the systems at this point. So the idea that somehow we're going to elect somebody different from within those two identical ecosystems, I think is not a place I'd pin a lot of hope. In the United States, we desperately need a third, a fourth, a fifth party. We need to find a way to have fractional power and representation. Those would be, I think, advances. But for now, in a winner-take-all system where, and by the way, this is just amazing, you still can't have an auditable election in nearly every state. Very few states where you can have an election and then if you decide to recount in a meaningful way what actually happened. Every state that still has electronic voting is utterly insecure, and it's absolutely this is where I lost hope on both parties. Neither party is saying anything about the fact that out of all the countries out there, and by the way, we're busy exporting democracy and we're worried that Russia is like interfering with our democracy. And we are one of the only, in fact, we are the only industrialized country I know about that has an insecure, unauditable election system that routinely gives us results that are statistically so improbable, I'll go further and say they're impossible.
A lot of the time when people hear about, oh, there's going to be this economic collapse or that we can't really change the system, here in the United States, it might be almost like a little bit depressing. But the whole point of your website is that, even though we can't control the Fed inflating the monetary system or manipulating the markets, or that we can't maybe control really who's in power, we still can take control of our own lives. So what are some ways that people can take control and still improve their own lives, and still thrive, even though we're going to see this crisis?
Great question, Elijah. And let me throw one other term in there, and I'll call it anxiety or fear. You said it might be depressing. Listen, if you know that this is the true state of the world, but these are your actions and there's a gap there, you can either be depressed or anxious or fearful about that. Listen, you can't unknow what you know, so you close the gap by doing different things. Our site is all about, look, here's the state of the world. I can't do anything about Fed money printing, but I can do things to protect myself from the influences and the impacts of that. I can't really do anything about, what Monsanto is doing with major agriculture in the Midwest, but I can control where my food comes from locally and how I choose to eat. So, really the things that we're talking about are helping people understand you have a lot of agency, a lot of control. There's a lot you can do in this story, and you should start doing those things. You'll feel better. And by the way, all the things we recommend people do are things that will make your lives better today, happier, healthier, wealthier, and make you more resilient for whatever future arrives, particularly if we have some of these, collapse or crash or, just more difficult futures, however that shows up. So we organize around the idea of there are 8 forms of capital. Financial capital, really important. That's one of the 8 forms. Make sure it's managed well, understand the risks, know what bank bail-ins mean. Make sure you work with a broker that understands how they could insulate you from a market crash, be able to answer a question like, what would I do if the dollar really suddenly got devalued? Those things need to be answered and addressed. And by the way, 99% of the brokers and financial advisors out there, they don't know they don't know how to operate in that sphere. Another really important form is your living capital, which is the shape you're in, and also the state of the health of the world around you outside your house. So there are things that I do in my life I plant lots of different plants that birds, bees, and myself all can eat from. I have a nice garden outside. I measure my wealth in my garden by how rich the soil is and how much deeper it's getting every year. So that's an example. When you build your living capital, and by the way, you can use financial capital to build your living capital, then you're increasing your resilience. And another example is your social capital, not just how many people you know, but how well you know them. And have you done things and undertaken steps to be in relationship with people so that you have a deeper, richer network today, which every study says, hey, that's a sure sign of, happier people tend to have better, richer, deeper connections. And we have a very isolated society right now that really enforces staying inside your own home and, looking at your screen on the TV, on the train and all that. So we talk about ways in which people can build their social capital. Makes you better today, but in the future, every study of what's happening in Venezuela right now, or did happen in Zimbabwe, or happened in Weimar Germany, says during times of economic crisis, your social network is actually the largest determinant of whether you're merely surviving or you're thriving. Do you have access to the things you want when you want them or not? So that's taking you just 3 of those forms of capital. Some of the other ones are cultural capital. Nothing you can do about that. Oakland, California has very different cultural capital from, say, Des Moines, Iowa. You've got as well your temporal or time capital. That's really important to manage and manage well, and make the most of the time you have here on Earth. Everybody has less of it today than yesterday. And as well, your material capital. These are investments that you can definitively make. If you own a house, particularly, you can make investments that have guaranteed positive rates of investment return that are in excess of anything Wall Street could ever guarantee, promise, or even hint at. And as well, your knowledge capital. Those are your skills. And it's the overlap between what you've learned and what you've put into practice. So that knowledge capital, skills, very important. And perhaps the most important one is your emotional capital. If you're rich in all other 7 forms, but you lack emotional capital, that is, you fall to pieces at the first sign of difficulty, doesn't matter how rich you are across the rest of them. So lots of things people can do to begin to increase their own emotional intelligence and undergo the self-inquiry that every who's trying to make themselves a better person has a coach, has a method for uncovering, where are they strong? Where are they weak? What are their limiting beliefs? How can they possibly be in better command and control of their reactions and responses as they navigate complex territory? So that's sort of the landscape, in very quick way. I'm glad you brought it up because, yes, the world's kind of depressing, if not anxiety producing, but that's only if you're not doing anything about it. So we really invite people to take action because that's where the relief lies, and that's where a better today and a more secure future lies.